Start.
Yeah.
It's 4:01 and good day everybody and a hearty welcome everyone to CMA Australia's special webinar on cryptocurrencies and Bitcoin. My name is Chris D'Souza and I am the CFO as well as the CEO International of CMA Australia. And our event today is truly global in that it is attended by hundreds of participants from 25 countries across all continents. There's someone from UK and someone from Canada. It was middle of the night over there, but there's still someone logged in there. That's why I had to say good day, because it's morning somewhere, afternoon somewhere, evening somewhere, night for some of the participants. We are all privileged to have with us today one of the visionary founders of CMA Australia and the best management accountancy educator in the world, Professor Janak Rattatunga. I could easily spend 1 hour talking only about Professor Janak, but you all know him already. And you also know that he's a true visionary. The topic of today involves a technology that requires you to be a visionary and forward-looking. Professor Janak is a forward-looking CEO of CMA and has been writing and teaching about blockchain and technology for a long time now. And more recently, he's been writing about Bitcoin. Prof. Janak and I have spent hours and hours discussing, arguing about Bitcoin, so much so that if we had one Bitcoin for every hour we spent, we would be Bitcoin billionaires by now. And that's how much time we spend. I'm sure all of you would like to be Bitcoin millionaires at least. And so without further ado, it's my pleasure to present to you two experts in the field who are very senior executives of Australia's largest crypto exchange, Independent Reserve. That's the organization. They will no doubt tell you more about their exchange, Independent Reserve. But it's my pleasure to introduce to you Lee Eaton, National Head of Business Development. Lee has 15 years experience working across the entire spectrum of business development activities and wealth management. Prior to heading up Independent Reserve's business development function, he worked across multiple roles with KPMG Australia, Evans Dixon, and the Department of Foreign Affairs and Trade, DFAT. Lee has degrees from ANU in both Commerce and Asian Studies and is a certified financial planner. His Lasanka Perera, the other presenter for today, is the Chief Operating Officer of Independent Reserve. Lasanka has over 12 years of experience in financial markets, trading markets, regulation, establishing successful consumer-facing financial service businesses. He has launched domestic and international financial services businesses by bringing together regulators, banks, institutions, and intermediaries. And so now, without wasting much more time, I will hand you over to our two learned L's, Lee and Lasanka, to take over the presentation for now. Over to you, Lasanka.
Thank you very much. What an intro. That's probably the best intro I think we've had. So thank you very much. I'm just going to share our screen now, and yeah, let's get straight into it. Okay. So great. Thank you very much for the intro, and wonderful to be here. Bitcoin and cryptocurrency in general is something that Lasanka and I spend all day talking about. We never get sick of it. And despite us working in this industry, we still find that the pace of development in Bitcoin and cryptocurrency just still outpaces what we can keep up with sometimes. And it's just it's a pleasure to be speaking with you about this topic. Obviously very topical, and we think it'll be even more important as we go into the future. Now, for our presentation today, I think trying to fit everything about Bitcoin and everything about cryptocurrency into a 40-minute presentation is really just not possible. But we do want to give you a real solid foundation into what is Bitcoin, how it works, importantly, why it's valuable and why we think there'll be more value in it in the future, as well as a little bit of an understanding about just what's happening in the marketplace overall, in terms of the institutions that are now involved and some of the people and some of the developments that are going on. So I think that certainly the format is going to be questions to the end, but hopefully we can educate you all very much along the way. So let's get into it. And like all stories, we have to start at the beginning. Okay, so now I've got to get that. So where did it all start? So Bitcoin and cryptocurrency, generally speaking, started with a gentleman named Satoshi Nakamoto, and the white paper, well, an article he wrote, which has become the white paper on cryptos in general. Now, Bitcoin, the Genesis block, the most famous date, I guess, for us is the 3rd of January 2009, when Satoshi Nakamoto mined the first Genesis block and started this whole networking interaction. But before the Genesis block really came the article you can see on your right, which was written by a gentleman, which we presume to be Satoshi Nakamoto. There is some folklore definitely that surrounds who he or they may be. But certainly the white paper he wrote, which is enduring and available on our website, really underpins, I guess, the technical understanding for what we now know to be blockchain, which really underpins the entire crypto industry. So for those of you who love the detail, that's all roads have to start from there. All right, so a little bit about us, and I think this kind of underpins sort of a little bit of the story of the growth in Bitcoin just generally. Now, this is kind of interesting as I'm going to tell the story that Lasanka lived. Lasanka is being one of the founders of Independent Reserve. Feel free to jump in and correct my story at any point. But the reason we started Independent Reserve was back in 2013. Lasanka and the other directors of the firm tried to buy some Bitcoin. And back in those days, to do so was very, very difficult. You had to send money across to, there was an exchange in Japan called Mt. Gox, which lives in infamy in and of itself. We had to send money across to, you had to send money across. It took weeks to get verified. The website continually crashed. I think you had to pay extraordinary fees just in the exchange rates alone. And then eventually the exchange itself got hacked. And so effectively the Independent Reserve was born when Lasanka and other directors said, hang on, we can do a much better job of this ourselves. Fast forward to 2021, and yes, as Chris kindly mentioned, we're now Australia's #1 largest crypto exchange in Australia, with well over $20 billion worth of volume over that time, over 200,000 users, and just an incredible story, and things continue to go well for us. So fingers crossed. So let's keep moving along. A little bit more about us, just from those humble beginnings. We've now got partnerships with KPMG Australia for our tax reporting for our clients. We directly stream information into Iris and Bloomberg, which supply most of the financial world, at least in Australia, to name a few. I'll keep moving through this because it's not about us, it's about Bitcoin. So let's get into the meat of it. What is Bitcoin and where to start? Feel free to anytime, LP, Lasanka, if you want to mention it. But how do I start? Bitcoin is unstoppable, irreversible, permissionless money. It simply is the world's most successful digital network. It still surprises me, and absolutely impresses me when I think about the fact that the network itself has been running for 12 years continuously with absolutely no downtime, no hacks, and there is no central authority that controls this network. And that really speaks to the technological revolution which the white paper outlines, which is the addition of this thing called the blockchain, which is really a public ledger, which requires, I guess, all users to validate their transactions on this open public ledger, which means you can't fake it, you can't hack it. And I think we'll come back to some of these technical aspects a little bit later, but just at the high level, what is Bitcoin? Bitcoin is now, simply put, as I mentioned, the most successful digital network. Now, just to put it in perspective how impressive that network has been, in 12 years, Bitcoin achieved what Amazon did in 22 years by reaching a total market cap of around $1 trillion. Bitcoin is a provably scarce asset with a rapidly falling available supply and a hard cap of 21 million tokens that will ever exist. I'm going to continue to come back to the fact of this 21 million. And if you're not already familiar with it, you'll certainly hear it in our presentation, and you'll become more aware of it as you look more and more closely at Bitcoin. Now, what that 21 million coins means, as I've got up there, is it's a provably computationally scarce asset. Now, what does that mean? as Bitcoin, I think the easiest way to understand Bitcoin and the value proposition that Bitcoin provides is understanding it is a growing monetary network that anybody who has access to the internet can participate in. And as we go through the presentation, you'll see why I think that's such a powerful idea and such a powerful, I guess, attribute of Bitcoin. But to understand the economics a little bit more of Bitcoin and why we're seeing this rapid price appreciation, and certainly in our view, we'll continue to see that price appreciation, is that you've got this hard cap of money that no amount of demand, oncoming demand, will increase. Unlike something like gold, for example, and so some of the comparisons that we're seeing as an emerging treasury asset and a store of value and as digital gold, I think rings true, because no matter as more and more people come onto Bitcoin, onto the network gets stronger. There's more and more competition for a falling supply of coins, which pushes the prices up. The price going up attracts more miners, more capital into the space, which brings in more people into that network, which brings the competition back in further on top of that scarce supply. So as we'll see later on, far be it from the early days of 2009, when we saw it with just guys and their computers, we're now seeing institutions of all sizes and individual all across the world now coming to Bitcoin for a number of these properties. So let's keep moving. Okay, a quick plug. If you are interested in more of the technical aspects and some of the terminology around cryptocurrency and specifically Bitcoin, but more generally cryptocurrencies, want to find out how, this book was written by another one of Lasanka's co-founders and it was also available on our website, and would love to share with you. A great resource. Okay, so let's start talking a little bit more. Hopefully you've got a little bit more of an idea about now what a Bitcoin is. And like I said, I will come back to talk about some of the technical aspects of it a little bit later on, but I want to really sort of highlight sort of why it's become of value and where its use case, as opposed to just being this internet money. And I think in the context of Australia, we tend to have a higher level of trust in our institutions and probably a higher level of trust in the stability of our dollar. But let's keep in mind the point that I made about Bitcoin is truly global. And as long as there is access to the internet, you can participate in it. And there are many countries around the world and many people around the world that don't enjoy the perks that we enjoy in terms of access to banking facilities and other developed financial markets or credit markets, or even just a bank, just a bank that is reliable. So if we look at a couple of the examples here, we've heard the example of Cyprus, where the people of Cyprus woke up one day to find their money gone, but also people, an example for Argentina. And unsurprisingly, these countries, you find a much higher adoption rate in terms of the volume and people who use Bitcoin because of those properties that I mentioned before. It's provably scarce, and and the fact that it's permissionless and the fact that it's unstoppable meant that a lot of people in these countries were choosing to use Bitcoin as a way to effectively escape the issues with their own local currencies. And I think an anecdote, not an anecdotal story, an actual story that I'm happy to share with you just to sort of illustrate this point. A gentleman that I was dealing with that runs a family office out of Malaysia, a very wealthy property development family, put it to me best, and he was a huge advocate for cryptocurrencies and a huge user of Bitcoin, for example, because for him, he sent his kids to Australia and he wanted to make sure that their education costs were protected and that he could get money to them easily. With some of the issues with the local currencies, but also just the constant devaluation that he saw in his local currency in Malaysia, meant that he needed a way to effectively be out of that system to preserve his wealth and move money across. He's now migrated to Australia. And of course, he can't move necessarily his physical assets, his property, and necessarily all his cash, but the wealth that he had stored in Bitcoin, apart from being an appreciating asset in itself, meant that the day he landed in Australia, he had access to a vast proportion of his wealth. And I think it's stories along this line for people who are coming from jurisdictions and countries where they may not have quite the access to credit banking facilities or quite the access to, I guess, control their own money, that really underpins why a lot of people around the world are now choosing to use Bitcoin. Now, moving along, a really important development that's occurred in the last couple of years, particularly in Bitcoin, I think that has massively changed. Absolutely, you can't overstate just how important this has been. Where Bitcoin made the leap from just being guys on their laptops using internet money to the world of institutional money was the legendary Paul Tudor Jones, who came out and said, you know, for a guy who runs a $38 billion fund to say, yeah, I'm an advocate for Bitcoin, I use it, and I see it, importantly, as a natural hedge against this great monetary inflation that we're seeing. Throughout my presentation, I'll consistently refer to this as a consistent theme with the value proposition of Bitcoin, which is that limited supply of Bitcoin. Just how limited, again, let me get the stats to you shortly. But I guess the key thing to take away from this is right now, throughout the globe, we're seeing a race to the bottom in terms of interest rates and a lot of, frankly, money printing that's going on. And where will this experiment end? We do not know. But if people like Paul Tudor Jones and Michael Saylor, who from MicroStrategy, who I'm about to speak about shortly, are now seeing Bitcoin as a better way to manage that inflation risk than gold, I think, you know, it obviously made a lot of institutions, a lot more people take note. I think Lasanka tells a great story about the presentations that he went to a number of family offices. I'm not quite sure if they chased you out directly, but they probably politely said, now's not the time. After Paul Tudor Jones, they all politely invited him back. If that does not sort of underpin just how important some of these comments have been, hopefully that example does.
It definitely was a true inflection point in terms of the trust in Bitcoin. Paul Tudor Jones's comments in the market.
Yeah, exactly. And fundamentally, any sort of monetary reserve is about trust, I think. And if you recall the circular diagram I had before, the more trust, the more people come to it, and the more competition there are for that scarce resource. So this is just really fleshing out the point I made before. We've all heard some frightening stats about just how many US dollars have been printed in the last 12 to 18 months, more or less with the click of a button. You know, when you consider that the stimulus package, which was 1.9 trillion, which is slightly more than all the tax revenue of the United printed in with a control P, add those extra dollars to it. You really have to start wondering about where is this monetary experiment going to end, and what is the best way to hedge against that scarcity tends to be, which the role that gold has always played. Has been that, whereas we think, you know, scarcity can be found in the digital network that is Bitcoin, and I think more and more people are starting to agree with that sentiment. Certainly, Paul Tudor Jones. Okay, so let's move. Another key development in the world of Bitcoin has been a company called MicroStrategy. I'm sure many of you would have heard about it, and Michael Saylor, who's become very much a figurehead for the industry. Who made a fairly bold move and felt that because of this melting ice cube effect of having this level of money printing, that he thought, as an actual an engineer, as an aeronautic engineer, a rocket scientist, nonetheless, you know, he looked at it and said, you know, well, this cash that we're on is a melting cube, and if I'm going to do the right thing by my shareholders, I need to move that into the hardest money I can find. And they looked through property, they looked through gold, and they settled on Bitcoin. So in accordance with their Treasury Reserve policy, they have been consistently moving Bitcoin. I think there must be up to around 90,000 Bitcoin now.
Higher, I think, Lee.
Higher, yeah. It moves so quickly. But again, a really important development. And we have seen other institutions like Twitter and Tesla is the big ones that you've probably heard about, but every day, certainly behind the scenes, we're hearing more and more companies that are choosing to hold their reserves in Bitcoin, as opposed to currencies which they're concerned about devaluing the value of those assets. Okay, So I want to talk about the state of things with the supply. Now, for Bitcoiners, this will be no surprise, but for those of you who want to know a little bit about how the supply works, what's incredibly important in the world of Bitcoin is every 4 years there is an event called the halving. And unsurprisingly there, when you look at the price in US dollars, tends to reflect the fact that each 4 years, the supply of new Bitcoins being issued, that is the supply of new Bitcoins that are being rewarded for the miners, halves, quite literally halves. You can see there the orange, how quickly that halves. And as demand continually comes online, and as we're seeing the demand is slightly increasing, if not remaining at least constant, each 4 years there's a supply shock that happens. And we start to see these sharp spikes in prices. The last supply cut that we saw was in May of 2020. And unsurprisingly, with the increase in demand, we've seen a fairly dramatic price appreciation since then.
Yeah, I think what as you look closer towards along that orange line, what you can see that, right now since May 2020, we're seeing, consistently the Bitcoin network produces 900 Bitcoins a day. Prior to that, before May 2020, for the 210,000 blocks, which is approximately 4 years, you see 1,800 Bitcoins mined a day. So as you see, the Bitcoin network is reliably, consistently, has a reliable and consistent issuance. And every 4 years, or every 210,000 blocks, which is every 10 minutes or so on average, Bitcoin continues to produce 6.25 Bitcoins, which converts to about 900 Bitcoins. So it continues that way, and this will be the way into the future.
Mm-hmm. And because of that halving, for the trivia buffs among you, the last full Bitcoin will be mined in 2140. So we have about 120 years until we see that last Bitcoin mine. But a bit like the story of the frog that jumps to the shore, but in increments of half, we never actually quite get there because it'll continually halve in perpetuity. Okay. So thanks, Lasanka. I think that was basically the metrics there that we just discussed. Just touching back on I think the way the best to describe this is when we talk about provably scarce. If we think about a traditional asset like gold, there is no amount of demand for Bitcoin that will increase the amount of supply that is going to be available for Bitcoin as that network grows. Now, if the price of gold went to $1 million an ounce, the amount of, exploration would increase, the amount of gold, perhaps people would be melting down their jewelry or pulling out their teeth. Look, I don't know. But the supply would respond to that price. That is not true of Bitcoin because it has pre-programmed and set on this path. And the only release valve for the increased demand of that monetary network is through the price. So, part of the reason that we are incredibly sort of positive about Bitcoin's future is it's a deflationary asset. It gets more and more scarce despite what the price may do. Now, an important part of the story about this is that not only is the number of new Bitcoins being mined reducing, the available Bitcoin is also reducing. So the metrics here, in fact, it's probably a little bit beyond this now, this is a few weeks old, 18.6 million Bitcoin have already been mined. We know that there is around about 14.5 million Bitcoin, which is already liquid, in cold storage, potentially lost. We're not 100% sure because it has just gone into cold storage and perhaps being held for the long term. Certainly, the data that we're seeing as of today's date shows that more and more assets are moving off exchanges, which means there's less and less supply. And the simple economics meant that it provided that the demand continues to increase, and we'll certainly touch on some of the demand factors. The only release valve is continually going to be through that price. So I won't read out all the stats there, but the key takeaway here, and this has certainly been supported by evidence even that we found as of yesterday, the supply is hitting all-time lows as we speak. I think I just touched on that point. If we took this and extrapolated to the exact day, I think this is maybe a couple of weeks old now, supply would still be lower.
Much lower.
Much lower. So I think certainly the supply side is relatively easy to understand. And as the network continues to grow and more people come to Bitcoin, we all know this. We all know how the metrics can work on that. But let's start with the demand. Now, I want to sort of talk about exactly where demand starts as of now, and it's not a simple question. One thing we can certainly say, as of today, we know there are around about 84 million active addresses. So that doesn't sound like a lot, but at best guess, the base case is there is at least 300 million users around the globe. So if you think of someone like a Coinbase, for example, or even Independent Reserve, who has over 200,000 users, and Coinbase, I think, has well in excess of 1 million. Those million users are sort of hid by the fact there's only one active wallet under Coinbase's address. So best case, we're looking at 300 million, but counter that with the fact that we know there's at least 60-odd thousand new crypto users, Bitcoin addresses, or Bitcoin users being added per day. So that network story is continually growing, and of course, and it's not just individuals. I guess the real key takeaway in terms of that growing use is the introduction of institutional money that we're starting to see now flow into this, in addition to the individual users. Now, there are a number of I think one of the best proxies that we can use at the moment is a company called Grayscale. So Grayscale has seen tremendous increase in the volume of its users. I don't know the current stats, but it's already a multi-billion-dollar fund that has been in operation for only a few years. Lost my place here. Grayscale is just one of a number of institutions that we've seen who are providing, I guess, an easier way of access for a lot of people who aren't going to buy the cryptocurrency directly. But not only has Grayscale been one of the biggest players in this and have gobbled up billions of dollars worth of crypto, we're, I guess, anxiously awaiting the approval of the first ETFs in the space. Certainly behind the scenes, we're seeing multiple crypto funds popping up by the day. In Australia, I think the only ETF we've seen at this stage is in Canada, and so we're eagerly awaiting the US ETF and certainly the Australian ETF, which is really going to be the on and off ramp for a lot of individuals who aren't, potentially going to take the plunge themselves, but want to have access through a regulated exchange. Sorry, what I mean is a listed exchange. Oh, keep moving through that. Again, I've touched on some of this, but I guess the key takeaway from this is the network is certainly growing, and we're seeing this borne out in the stats and the amount of money flowing into those new funds that are becoming available, and will continue to fund as we start to see new ways to access Bitcoin and other crypto assets. Now, I really want to quickly touch on a term that you will definitely hear around Bitcoin circles, which is the hash rate. Now, the hash rate is, I guess, relevant to the security of the network. You think of hash rate, the higher the hash rate, the higher the security of the network. Hash rate effectively means the amount of computing power that is being brought online to support the network. Now, as I mentioned before, that kind of virtuous cycle with Bitcoin means that the more the price rises, the more we see computing power brought online, and the more computing power brought online means the more, investment that's going into Bitcoin. But also, I guess what's we're looking to that is an indication from the market of how they feel about the future price increase of Bitcoin. If you're a listed miner and you're going to see hundreds of millions of dollars worth of CapEx into your mining operations, then you need to sort of see this as a bit of a proxy for how, I guess, enthusiastic these institutional players are now in becoming involved in that crypto space. And that's probably the key takeaway I want to mention there with that hash rate. But for those of you, again, who are technically minded and want to know exactly what a hash is and how the mining network works, the book that I posted before that's available on our website is the best place to start. Okay, just keep moving on there. All right, so now I want to switch gears just a little bit to start talking a bit more about the institutional involvement. Now, I think the role of institutional money is fairly self-explanatory. You can see on our chart here, I like some of these terms, the techno-libertarians and the early adopters and the retail. It's a bit of a funny way to go about it. Normally, we probably see the techno-libertarians and the early adopters there, then the institutions. But in this case, Bitcoin has been a bit unique in the sense that it's actually been some of the retail investors front-running the institutional money. But institutional money has now arrived. I want to give you a bit of a sense under the hood as exactly who those institutional players are and what they mean to the future of Bitcoin. Okay, so this list is probably already outdated. There's some names that you're definitely going to recognise. Obviously, Paul Tudor Jones and the Ray Dalio's, the Stan Druckenmillers, Michael Saylor, Jack Dorsey, who is the CEO of Twitter, Elon Musk, who needs no introduction, Peter Thiel, who is one of the co-founders of PayPal. Some big names have all come out now as advocates for Bitcoin and the role that cryptocurrencies will play in the future. And again, some of the institutional names, which a mere 4 years ago, I don't think any of these institutions would have been involved. JP Morgan, perhaps being one of the most classics, with Jamie Dimon, their CEO, had gone from absolute Bitcoin skeptic, saying that it was effectively a fraud, to now actually having it as an allocation as 1% for their wealthy clients. Bitcoin does seem to come at you very fast. And some of the real important names within that list would have to say the PayPals of the world and the MasterCards of the world, and as well as Visa, which we can add to that list now, which have really provided an additional on and off ramp for the masses to be involved with Bitcoin. One of the stories, I don't mean to digress too much, but one of the stories about my own involvement with Bitcoin came in 2012 when I was at a wedding. One of my good friends, and I was speaking with someone, this is back in 2012, about Bitcoin. And it's funny how, I guess, people change their view on things. And he said, what do you think about Bitcoin? And I said, I'm skeptic of this. It doesn't make a lot of sense to me. I said, you can't use it to pay for anything, and I don't know how we're going to have the technical expertise to actually get access to it, and how am I going to buy anything? Fast forward just a few years, and that question has already been solved. PayPal, Visa, MasterCard all provide you now access, and you can buy your Big Macs or Tesla. You can buy your cars now directly. And I think, again, it underpins just how important having these institutional players with their broad reach and their big incumbency in terms of their network effect have been to the future adoption of Bitcoin. So I think, if we look at it just from a perspective of 4 years, within the space of 4 years, I don't think any of these names would have been involved with Bitcoin, to now being just 4 years later to have all these names involved and helping increase the adoption rate of cryptocurrencies and Bitcoin specifically. The mind just boggles to think that where we will be in the next 4. But again, that's probably why we're so excited about the space. At the time of publishment, this is of 2 weeks ago, this is probably already out of date. You can see some of the names of the listed institutions across the globe, which are choosing to hold Bitcoin treasuries over their cash reserves. Unsurprisingly, that list has already increased to some household names that you would have seen since, which the biggest is probably Twitter, and Nexon, the gaming giant, has just joined the list as well. I got ahead of myself. Yeah, we've already talked about PayPal, but I think the big question that has been in a lot of people's minds for a long time is how will this become integrated with our everyday lives? How will we use this technology? Sure, it sounds great, but how are we going to use this? And PayPal and the likes and their giant reach with 364 million users in addition has just made it massively accessible to just a massive audience. And I'm going to say it again, just in case it isn't ringing already abundantly clear. There are only 21 million Bitcoins, and there's more and more demand, and that's growing by the day. I've touched on this point as well. Add to this list Goldman Sachs, who are now also actively finding crypto exposure for their clients. Now, a large part of my role at Independent Reserve right now is speaking with a lot of wealth managers in Australia, and unsurprisingly, they're all getting massively inbounded with clients who are looking this, asking for them for exposure, and we're providing some of the solution for them. So it's not just in the US, Australia, and I suspect the same story is being repeated, and it really is, again, a story of adoption. And I can't stress enough just how important some of these developments have been. So I think, in summary, in terms of what Bitcoin is, I like to describe it as the world's most successful digital monetary network, which, with a provably scarce supply, is meeting an increasing amount of demand. And I truly think the more global this goes, the more price appreciation we will see, and will only become more widely accepted throughout the globe. Okay, how are we going for time? I think I'm very, very close to my 40. So I've got 5 more minutes, I think.
3 minutes, top right.
3 minutes. Wow, that was on. There you go. I'm happy with that. A little bit more about just Independent Reserve. You can see Lasanka there on the left, but our other two founders, Adrian, don't make me pronounce it, and Roman Stefanini. It really impresses me that in 2013, these guys thought to quit their day jobs and open up a crypto exchange before we sort of knew where it was. But amongst the guys there, another gentleman named Untitled Chapter, who unfortunately is no longer with us, really believed in, I guess, the value of Bitcoin and having a truly decentralized peer-to-peer cash system that was controlled by the people. Oh, that's nice. I'll quickly move through this because it's not really about Independent Reserve, but certainly there to do. And I really just want to finally sort of finish off on Bitcoin in the portfolio. I think, hopefully you've seen just through some of the involvement and the growth of the story of this Bitcoin and where it sits in the world today, that there is a role for Bitcoin in all portfolios. I certainly think there are the Bitcoin maximalists out there who decide to keep all their cash in crypto. I'm not advocating that for first-time users, but I certainly do think there is a role for everyone's in Bitcoin. There is a role for at least having more than 0 in people's portfolios. Obviously, Bitcoin has been an exceptionally good performer. I don't think I need to talk to that. But in terms of how that manages risks and add alpha to a portfolio and actually just reduces the overall volatility of a portfolio, I think that speaks for itself just in terms of how well it's gone and will continue to go. We don't see a lot of correlation between Bitcoin and existing assets. Bitcoin, as I said, I think I've said enough times that Bitcoin is a growing monetary network, and it's certainly on its own trajectory. It's on its own growth trajectory, which is very important in and of its own right, and a feature for it being in portfolios. And apart from providing some return, certainly there is some volatility there, but it reduces the overall risk. You guys are all accountants and you all have a far better understanding of a lot of stuff than probably we do ourselves. So I'm going to just leave it kind of there. I think in summary, I've probably repeated myself a few times about the scarce properties and the growing network effect that underpins the value of Bitcoin. And the fact that you can use it, the fact that it's accessible to anyone around the globe at any time underpins some of the, certainly the value of Bitcoin, but some of the reasons why we think adoption will only increase from this point on. So my time is up. I've done well. I think I'm right on the spot. I'm going to leave it there and start asking the questions from the floor.
Thank you.
So, I think I need to stop sharing my screen.
Thank you very much, Leah and Lasanka, the 2 L's. Thank you. Have you all been called that before? I'm just saying. Anyway.
First time at CMA. Yeah.
Good. Thank you. We try to be innovative. I'll hand over to Professor Janak, our CEO. He will look at the question answer box and ask the most relevant questions based on his experience. Prof, over to you.
Okay, thank you very much. I'm picking randomly the questions to make it have a flow because there's a couple of connected questions. The first one is, I think, a comment, right? How reliable is the assertion that there's a limit of Bitcoins? Of course, I think this assertion comes from the view that we are going with a academic paper that no one really knows who the author is, and that the equation or the algorithm has a limit, but has it actually been tested if that limit cannot be exceeded? And there was a story that they're going to actually halve all the Bitcoins in July. I don't know if that story is true or not. So that's the first one. How reliable is the limit that there is the assertion that there's a limit to Bitcoins?
Yeah, so I'll take this question, Professor Johnny. Yeah. It's absolutely reliable. So if you look at the Bitcoin white paper, you'll see there's an outlines the future supply of Bitcoin. What's the software that was deployed in 2009 is based on that white paper. Basically, the rules that are stipulated in that software, that outlines how many Bitcoins there will be at any point in time, and that will show that Bitcoin actually reaches, by the year 2140, it reaches an asymptote of 21 million. And the only way that that supply cap can be altered is by more than 50% of the network, which is more than 50% of the nodes, the network participants agreeing to alter. Yeah. So it is absolutely proven, tested, and you can check the software, you can check essentially everyone on the network agrees that they'll be, approaching 21 million Bitcoins by the year 2140. Yeah. So it's in the white paper, in the software.
Right. This is just my thoughts very quickly that 50%, there may be an incentive for them to actually increase, because in a share split, although technically when you break a share into half, the value halves, but in reality, there's a behavioral aspect to it that the share value is not half, but higher than half. So there may be an incentive to split a Bitcoin if 50%, more than 50% agree. Is that a fair comment or not?
No, look, I can't comment on the future, but what I can say is all of the holders of Bitcoin to date would be adversely affected if the supply was essentially doubled. Okay. You made a comment before that Bitcoin will be halved, but perhaps a misunderstanding of what happens in mining. So what happens is that on average, in every 10 minutes, this is, I'm just talking about the rules in the protocol. Every 10 minutes, a block of Bitcoin is mined. Over time, what happens is the size of that block reward that is mined every 10 minutes has fallen over time. So in the first 4 years, in the first 210,000 blocks, so going from 2009 to 2013, a block reward in Bitcoin was 50 Bitcoins. So in 2013, that block reward halved, and it went from every 10 minutes, the block reward went down from 50 Bitcoins to 25 Bitcoins. And in mid-2016, it went from 25 to 12.5. And in May 2020, that block reward halved again to 6.25 Bitcoins on average every 10 minutes. And again, and we mentioned to you, the Bitcoin network is predictable and reliable over time. In June 2024, the Bitcoin block reward will halve once again, when the block reward will drop to 3.25 Bitcoins every 10 minutes.
Oh, okay, I understand. Thanks for that. Now, on the same note, there's another question here that you talk about the limited supply of Bitcoins, but there is no limited supply of cryptocurrencies. Everyone is popping up every time. So what makes Bitcoin so special that, there's even Dogecoin and Ethereums and all of this, okay? Why would one want to stick with Bitcoin when the supply of others is unlimited?
In our perspective, we look at Bitcoin as a very unique asset. It is a network, that has hundreds of millions of participants. Lee, I think you can correct me on the exact number, but that network which has had uptime of 99.9% uptime over 12 years. That network, that's continued to produce block reward after block reward every 10 minutes, continuously 12 years. That's immense. The way that, there is this predictable, transparent supply, which diminishes over time. The amount of mind share that's gone into this sector, the amount of regulation, the amount of infrastructure that's building around Bitcoin. We think that is truly unique, and that sets it up at other asset to be a future world reserve asset. There are a number of other assets. The beauty of this network is it's open source. The code is out there for anyone to see. The code is out there for anyone to replicate. But what sets Bitcoin out as a winner is that it is, it's got this network effect, and it's got the leading amount of mind share, and a network that's, been up for 12 years plus. So that's one thing. The other thing is, there have been, whilst Bitcoin created this initial blueprint for decentralized, unstoppable money, Ethereum, the second biggest cryptocurrency by market capitalization, it does, the idea behind Ethereum is to do something far different. Decentralized computing, which could enable far superior, far more complex transactions by a smart contract, Turing complete language, which means it can support far more complex transactions, like enabling financial markets transactions like borrowing insurance in a decentralized, unstoppable way, which is still at the same time permissionless to anyone that wants to join the network. So with each of these assets means, it doesn't say there's more Bitcoin out there, but it is creating a whole other field of innovation. It doesn't mean there's more Bitcoin out there. These other assets, and there's crypto other assets, they are innovations of other things. And then there are a whole bunch of other projects. You mentioned Dogecoin particularly, but a whole lot of other projects that, whilst they may try to, build other use cases, they may be driven by nothing other than, speculation or belief systems.
Yeah.
And ultimately, money is belief system.
Yeah.
So
The only point I'd add to that is just in terms of perspective, in terms of the network incumbency and the value, the incumbency that Bitcoin has, and Bitcoin's market cap is now over $1 trillion. The next closest competitor is Ethereum, but Ethereum is still barely a third of the total market cap of Bitcoin, even despite its recent sort of pretty big surge. And then if you start looking at the actual valuations, the actual the market cap of everything else, it pales. It makes up the bottom kind of 5% of everything else, despite the fact that you see these impressive price rises. And as Lasanka had mentioned, a lot of those projects aren't aiming to be Bitcoin. They are aiming to have other applications.
Okay. On that, I'm taking a little bit two questions at one. One is a little bit simpler to read out. The other one a bit more complicated. So I'll read the first one. Okay, they're linked. Does every fractional Bitcoin transaction result in a new block on the blockchain? If so, as every Bitcoin transaction is verified, which is what I think you said, then what does it cost to verify every transaction, especially if it's a fraction of a Bitcoin? Do all miners verify all transactions? In other words, we are not talking about the mining, but the buying and selling.
No, so let's kind of take it from a more fundamental perspective. So what happens is Bitcoin is a pure market-driven system, right?
Right.
So what happens is when you try to broadcast a transaction, regardless of the size, right? So this could be, you're trying to send a few Satoshis, where the Satoshi is a 100 millionth of a Bitcoin, so it's 8 decimal places, or whether you're sending 1,000 Bitcoins, miners process that transaction in the exact same way. So when you're trying to send a transaction, regardless of size, you stipulate a fee, right? And what happens is miners look at, and when you want to send a transaction, when you broadcast it, it essentially goes into the Bitcoin memory pool of transactions yet to be broadcast, put on a blockchain. What happens is miners then, in a purely capitalistic way, look at transactions according to the highest fee. A fee, so when a miner mines a block, their reward is one, the block reward, which is the 50, right now 6.25 Bitcoins, but they also get the transaction fees that Bitcoin network participants choose to put on their transactions. The higher the fee, the faster or the quicker their transaction will be processed by the network. It's a purely market-driven system, right? So the size doesn't matter, the fee matters. So when more and more transactions as the network gets busier, miners, and so each block has essentially a limit, like a data limit. How many transactions can go onto a block? Miners prioritize in highest fee, and there's a size limit on how many transactions can go into a block. So miners pick the highest transactions fee, they put it onto a block. It's a purely market-driven system in that way. Yeah. So regardless of the transactions, the transaction size, miners prioritize on fee that a sender puts on the transaction.
Right. That sort of brings up the next question, which is about performance limitations. If it says Bitcoin exchanges cannot, because of performance limitations, record each and every cryptocurrency trade on the blockchain. What you're saying is that there's a lag and the miners choose, right? So they appear to be recording just your deposit and withdrawal in a sort of private ledger. This way, the exchange manages transaction volumes without upsetting the ledger, but at the same time, it exposes the investor to an additional level of risk, which they don't talk about because of the off-chain recording of trades within the exchange. Now, I think Dr. Chris sent this question to you all earlier, and you all have responded to him. But if you can respond to the others about this performance limitation.
I think that question actually this touches on a few different topics.
Yeah.
And I'll start with the exchange component. How exchanges like Independent Reserve, like Coinbase, like every exchange you hear in the world, how they operate is they essentially, all of the transactions that happen inside the network are off-chain. Right. So for instance, us, we have 200,000 customers.
Yeah.
They deposit, lots and lots of cryptocurrency to us. They deposit lots of fiat currency to us. Yeah. Essentially, what we do is we manage an internal ledger, internal to our own business.
Right.
Professor Janik owns this many Bitcoins. Lee owns this many Bitcoins. We have this internal ledger. And when you guys trade, we update our ledger of whose Bitcoin went to who, whose Australian dollars went to who, so on and so forth.
Right.
And that's the way exchanges like us can support hundreds of thousands of transactions per second. When we update the blockchain, so what happens is we manage, when a client deposits cryptocurrency to us, they deposit cryptocurrency to wallets where the exchange hold all the private keys. And this is true of every centralized exchange in the world. So we hold all the cryptocurrencies. So when an internal transaction happens between two of our customers, we don't update the blockchain. The only time we update the blockchain is one, when a customer requests a withdrawal of cryptocurrency. So then we send Bitcoin from out of our wallet to the customer's own wallet. This transaction is then broadcast onto the Bitcoin blockchain, and then the customers see, when there's one or more transactions, they can see that the Bitcoin's gone from our wallet to the customer's own wallet. And the other way is when a customer sends Bitcoin to the exchange wallet. They broadcast a transaction on the Bitcoin blockchain, and then we pick it up on the in our wallet, and then we credit it to their own customer account within the exchange.
Okay, right. That brings up a few points that I will take offline to discuss with you about is there a possibility if you all have an offline ledger that someone, Professor Janek, can sell his Bitcoin twice, once on your private ledger and once outside, but we'll talk about that later. That's interesting.
The answer is no. Yeah, the answer to that is no. I can answer that now or later.
Okay. Yeah, please do. The answer is straight no, is it?
The answer is straight no. So when, so say Lee is the customer and I'm Independent Reserve, the exchange.
Yeah.
Lee has sent his Bitcoin from his own wallet to the Independent Reserve wallet. He no longer has that Bitcoin.
Right.
It's now in Lee's Independent Reserve Bitcoin wallet.
Right.
He's got nothing to sell over there. He can't send it again. One of the things the Bitcoin network does is it avoids double spends. Right. Yeah. It's got because of the mining, the incentive, the rewards, how the Bitcoin, that market game theory works. Something the Bitcoin network does is it avoids double spends. So Lee's Bitcoin is now in the Independent Reserve wallet. The only way he can use that Bitcoin is either to withdraw it or to trade it on the exchange. So there can never be a double spend in that situation.
Right. Okay. Right. Okay. That's good. So in other words, you will be having just for the others, I know the answer to this, but the others, you'll be having Lee's private key to the wallet inside the Independent Reserve. Is that correct? So that's the way you can.
No. So Lee has his own wallet. Lee has his own private key to control that wallet.
Yes.
Right? We don't get his private key. What he does is when he sends his Bitcoin from his wallet to ours,
yes.
What he does is he uses his own private key
yes.
to sign a transaction.
Yes.
Right? The Bitcoin moves here, he keeps a private key.
Yeah.
This wallet, the Independent Reserve hot wallet, we have the private key to that. The private keys don't move. He's got his own private key to his own wallet.
Yeah.
Independent Reserve holds the private keys to our own wallets.
Right.
Yeah. So we don't get his private key. When a customer sends crypto to Independent Reserve or any other exchange in the world, the exchanges hold the keys.
Okay. So the private key that you hold is your own private key, but in that ledger, your ledger, you have some of Lee's Bitcoins in your wallet. Is that correct?
Yes.
Okay. Right. So that's, I think, what about the performance limitation aspects of all the withdrawals? Is there an issue there?
Yes. So we can look at this from, a number of different ways. You can look at the public Bitcoin site. So as the network has grown, very rapidly over the last few years, and it continues to grow, the network has got congested from time to time. Particularly when at times of market volatility, when people want to trade, when people want to move assets fast off exchange, the cross exchange, all that kind of stuff. But, again, this is a market problem. So the Bitcoin network, the developers on the Bitcoin network are building, market participants are building ways to improve the throughput of the Bitcoin networks. They can hire faster transactions. It's like they are building layer 2 technologies handle faster transactions through the Bitcoin network. And then from an exchange perspective, from time to time, some exchanges around the world have struggled with volumes, and particularly in those times of high volatility. Independent Reserve has never had such volume issues. But, something we've done really well is continue to scale our business to be ahead of, what the market demands. Yeah. But yeah, exchanges do face congestion. They just need to be, I guess, forward-looking and scale their technologies, their servers, and their team output. And we've always managed to do that really well at Independent Reserve.
Right.
Just a quick one on that, a question here. If Independent Reserve goes bankrupt, belly up, whatever you call it, it just goes off, do the people who are holding Bitcoin in your Independent, do they lose their money? Their Bitcoin?
They will not. So Independent Reserve hold all of our client assets separately to our operational funds. So that's one thing. We also hold, I guess, a number of Yeah, so we separate all of our client assets from our operational funds. And I guess we've got a number of safeguards to prevent that happening, essentially. Yeah, so we manage this in a very professional way. We've got extremely skilled board and management. We've got a professional CFO. We are looking at various levels of audit within the firm. Yeah, so our customers won't be affected in the case of a corporate insolvency of Independent Reserve. But at Independent Reserve, we're one of the oldest exchanges in the world, operating for 8 years. We've been profitable for many, many years. So we like to think it's very, very unlikely.
Okay, Chris, you want to ask another question?
No, you go ahead.
No, there's one. Your presentation is of Bitcoin as a currency, but tax authorities treat it as an asset like gold. Okay, and tax accordingly. How do you? I mean, for example, if you have a currency like a US dollar, and you buy US dollars at a certain point in time using Australian dollars, and then you convert the US dollar back to Australian dollars, you don't have to tell the tax department that you made a capital gain or loss, right? Unless you are a trader in that. But in the case of Bitcoin, you're supposed to, I don't know how the tax department is going to know it, but you're supposed to report, even if you buy a Tesla for 5 Bitcoins or 1 or 2 Bitcoins now, you're supposed to say that you got your Bitcoin at $2 and now you bought a Tesla at $70,000. You have to show a capital gain. So I suppose it is considered like gold rather than currencies, is really that question.
Yeah, absolutely. I will preface this with saying, we're not licensed to provide tax advice.
Yeah.
However, our partners at KPMG, who have built this world first KPMG Independent Reserve tax integration, can give you great tax advice on this, no doubt, as well as probably some of you guys at the CMA. But yeah, Bitcoin crypto assets in Australia are considered a capital gains asset. So you get gains on capital gains if you're holding more than 12 months as a discount. And there are, I guess you can get a tax ruling if you're a trader to, make it part of, anyway, not really part of our space to comment on. But we've known a number of our sophisticated traders have got tax rulings based on, how their entity type, how frequently they trade.
Yeah, and just on that, I mean, certainly with the term cryptocurrency, I think, particularly as it applies to Bitcoin, maybe somewhat of a misnomer now that we've seen the real use case for it is, as you point out, more like digital gold. People are holding it not as a way to transact day to day, even though you can, but far more as a store of value and using it to try and grow their wealth.
Yeah.
Chris,
question here from Professor, sorry, Prof. Janak, you were saying something?
No, please go ahead.
Yeah, Professor Brendan O'Connell, the president of CMA, he has asked an interesting question. What is the underlying value in Bitcoin? Is it in being a future popular medium of exchange or as a store of value or something else? I know there's a lot of demand for it, but what is the true value underpinning that demand? And a related question asked anonymously is that what if most of the governments of the world declare Bitcoin as illegal for some reason because of threat to their own currencies? How would that affect this thing? Sort of, this is all understanding the underlying value.
It's a good question. I mean, the market is the market. I mean, it trades continuously 24 hours a day. So I think the value is the value in the market, and the market tells you the signals of what it's willing to pay for anything. But I guess fundamentally the question is, so people try to apply various metrics to it, but I always come back to the question is how do you value a monetary network as successful and large as the Bitcoin network? And how do you value, the ability to basically be your own bank and transfer assets around the world instantaneously? And how do you value the value of having a fully decentralized network that anyone can participate on? I think it's a really difficult question. So I often just go, look, the market, I think, is the ultimate judge here. And the market is telling us what the price is, and price discovery is happening constantly. So I think to future value it, I guess it comes back to that point that I made about what's your bet on the future growth in terms of people and demand for those. And look, certainly what we're seeing is the growing demand, but could that ever change? Absolutely, and it's certainly a risk. My view, and I think the view that a lot of people in the crypto world are starting to view it as far more as a store of value than a medium of exchange, as a general kind of, I guess, view on it. And where I think I might have missed your last question there, which is.
Yeah, before we get on to that, like the way I would look at it is in terms of my own personal savings. Some time ago, I used to save in dollars. My savings and my family savings were in dollars. Since COVID, there's 40% more money supply in the world. So my savings are now have been debased by 45% in the last year and a half. There's one currency that I can say that hasn't been debased, and that's Bitcoin. And what is the value of that? So one of the earlier slides that Lee did it was called the aha moments. The people of Cyprus had their aha moment when there was a banking crisis in Cyprus, when people's savings one day were haircut overnight, essentially. The people of Argentina had their aha moment. When they had hyperinflation, their money was inflated by hundreds of percent over a very short period. The people of India had their own aha moment when there was a massive demonetization in, I think, November 2017, when essentially, 85% of the circulating cash in the economy was rendered worthless. So people need money they can rely on. Money that they can rely on is they can reliably hold it without anyone confiscating it. They can reliably send it and receive it without anyone stopping and reversing it. And they can reliably know that this supply isn't going to be, inflated in an unknown percent as chosen by a very select few people that, run a central bank or a government. And I think Bitcoin is a very unique asset that does that. And the value of that right now, it's today in dollar terms, it's 1 trillion. But as we go in time, as more fair currencies continue to be debased faster and faster, I think the value of that network will be far greater. Very my personal view, by the way.
And just on the point about government banning, I think that one comes up all the time. But in countries like the US and certainly Australia, we have pretty good property ownership rights. And yes, governments could ban it. I guess that's always a risk. But like I said before, we have pretty good property ownership rights, and the likely government will just come and effectively steal your property by outright banning it, I think is very remote. But to also put that in more perspective, I think, we have heard some really encouraging, this is by guys in the SEC, which has basically come out and said, hey, it's peer-to-peer technology. We really can't ban it unless we shut off the internet, for starters. And in Australia, I think a great example was Lasanka and I sat in a room with Senator Andrew Bragg, and he said, look, they look at Singapore, they look at England, they look at the US, and countries like places like Miami, which have developed some really impressive policy framework around building up the crypto industry infrastructure. And they're looking at jobs, and they're looking at money that's pouring into those developments, and they're looking at the opportunity it's giving people. And they're sort of saying, no, we don't want to fight this, because this is giving us jobs, it's giving us resources, it's sending us the best people. This is actually something that we want to support. Andrew Bragg's sentiments to us, and he candidly said, look, the industry we understand you guys want regulation, because as soon as there's regulation, there's more certainty around that. We want to give that to you, but we need the industry to kind of tell us what you want. So all in all, it was a really, really productive and really encouraging signs, particularly in Australia. But what we're seeing over in things like in the US and areas like Miami right now, Miami is they want to become a tech hub. You want to become the San Francisco on the beach, down in Miami, on however we put it. But also as well, like in the US, for example, Senator Cynthia Lummis is actively promoting Bitcoin as wanted to be the treasury reserve asset of the state of Wyoming. So even at the highest levels now in government, we're seeing real support for crypto and the growth of the industry. So look, it's certainly a risk, but I think there are some real positive developments that we're seeing daily to really reduce that.
I think it's becoming a lower and lower risk as we go on, and as there are ETFs launched, there are, I guess, banking charters handed out in the US to crypto businesses, essentially, Yeah.
Look, we are well over time, but I want to take one or two questions more. There's a huge amount of interest here.
Let's
I
give
want to
it-
take one,
President.
which is very close to my own heart and Chris's, and that's our sustainable value creation logo of CMA. And it says, Alex de Vieres, a data scientist at the Dutch Central Bank, estimates that each Bitcoin transaction requires an average of 300 kilograms of carbon dioxide. How can it be sustained in the long term? I think this means to mine a Bitcoin. Okay, and of course it says what is the carbon footprint of a Bitcoin. Now, I'm not still sure about this. I can see the carbon dioxide impact of mining a Bitcoin, the huge amount of electricity. But when you do a transaction of a fraction of a Bitcoin, is there any carbon dioxide emitted to record it on the blockchain? It's a fraction of a Bitcoin being sold from your exchange to somewhere else.
Not on exchange.
Not exchange.
But yeah, mining has energy costs. I think you can speak to that.
Yeah, absolutely.
But it's mostly renewable now.
It's a real, yeah, look, absolutely. I think, put this into context, I think people talk about the energy use of Bitcoin, and, we rarely see people talk about the energy use, for example, for gold mining and how much energy it takes and how the environmental destruction, mining gold, for example. But Bitcoin is power intensive, absolutely. It's 120 terawatts worth of energy. It's the energy of a couple of countries now to run it. But the incentive within Bitcoin is certainly to get the lowest cost possible. And so it's actually driving a lot. And you can see statistically, I don't have the figures in front of me, but I'll happily share with you. Categorically, the Bitcoin mining is becoming more green and is driving technology in the green space. Now, I'll give you a couple of examples. One of Australia's certainly largest mining company which is actually one of the world's largest miners, is entirely hydro, and it actually works because it helps stabilize the grid. And geographically, it doesn't need to necessarily be near where the human population is. So I'm jumping around a little bit. Let me rephrase that. Let me use another example. To mine Bitcoin, you don't necessarily need to be near the geographical population. So part of the issue we have in just energy use in general is that the power needs to be generated near a population center. That is not true of Bitcoin. So we're seeing mines pop up in Siberia. We're seeing mines pop up in the mines of Kalgoorlie in Western Australia. Because, for example, they use gas flaring as a great example. So if you're building an actual mine, digging up copper and gold, you have to flare all the natural gas or the methane and everything that's being flared. Now, those mining companies have to flare their methane and noxious gases. And so what we're seeing now is, for example, and this is just one illustration, we're seeing people who mine Bitcoin going, well, we don't need to be near a population center. How about instead of you flaring that gas and just setting a light because the resultant, burning that gas is less environmentally damaging than just flaring the methane, let us capture that energy and let us start using that to mine Bitcoin. So in places like Africa and certainly Australia, we're now seeing a real interest in these places that are not where the people are, but where there's an internet connection, and you can set up Bitcoin mining there. And then a couple of examples, like the hydro example I gave with Iris, is helping stabilize the grid because now they're not during those peak times, the grid's not being overloaded, they're using excess green energy. There's certainly a premium which is being placed on companies that use green energy. And I wish I had the stats in front of you, but categorically it's driving, like I said, it's using a lot more green energy than it initially did. And B, it's driving innovation through some of just that example I gave you, plus other examples of which I don't have time to go through, like the gas flaring to power these mines.
But I would say at a very high level, I don't have the exact data, the numbers, but when thinking about the Bitcoin network, I would say government departments, banks, credit card companies, they all use multiple times larger amounts of energy to process transactions in a far more efficient way than the Bitcoin network does today. And we can provide you more data on that. But I just don't have them on hand.
Right. I think this is the final question. I hope, I don't know if Chris, you have one, but I like this one, which is one that's puzzled me. who maintains the blockchain Bitcoin network? For example, upgrade the software, fix bugs, etc.
So there are Bitcoin developers, there are network maintainers, and these guys are essentially kind of doing it, running it on donations, essentially. So for instance, we, Independent Reserve Maker, we make Bitcoin donations to a number, a Bitcoin developer and a Bitcoin network maintainer. These guys are just guys developing the network, making it, they're being rewarded for essentially building the strongest, biggest financial network in the world. And then the miners, miners process transactions, nodes relay transactions, and essentially users of the network, they pay transaction fees, which then reward the miners. Yeah, so it's a very reflexive network that feeds off each other, and it's driven purely by game theory, and it just continued to grow and grow and grow, and will continue to grow for the foreseeable future, particularly as more and more value pours into the network, particularly as a global macroeconomic backdrop feeds it, as yields head to negative and below. We see that the Bitcoin network getting stronger and stronger.
Chris, over to you.
So the last word, since I started on my end, but with a question, and that question is to you. I'll give you my answer first, and then hand it over to you guys to plug yourselves. The question is, what website is best for me to register for or start investing in Bitcoin cryptocurrencies? I am in Australia, and my personal opinion, we are having this webinar today because CMA and me, for myself, my super fund, we tried to open an account on Independent Reserve, and Independent Reserve, excellent. Lee got in touch with me actually, and we had a discussion, and that's how we have this webinar today. He actually contacted me, so that's great. So I would suggest that you go onto the Independent Reserve website. It's very easy to use. I found it easy to open the account. Absolutely no problem. So I would recommend them. And the other question, Lee and Lasanka, if you can answer, is it only for people in Australia, people outside Australia? Well, as I told you, we've got 25 countries here. They could answer it. And also, if you could tell the rest of the people asking questions, whether they can, is a forum for them to ask it of Independent Reserve on your website. All this together, and we can close off there.
Lee, you better take these ones.
Yeah, there's a few things there. Oh, no, absolutely. We service, I haven't got the exhaustive list. On our website, we can service multiple countries and multiple jurisdictions. So I'm not sure how all the countries that we can do for. The list is a good 35 countries on that list that we're happy to take. We can verify you and you can trade on our platform. And we have multiple deposits. So whether it's USD or Singapore or New Zealand dollars.
And Australian dollars.
Australian dollars, of course. Without knowing all the different members, I would suggest jump on the website, have a look. But the shorter answer is yes, we'd love people from all throughout Asia to join our platform, and we can service you all. Provided you're on that list and there's no sort of, I guess, jurisdictional issues, sanctioned countries.
Do you all answer questions like this on your website? Just to say, so there are lots of questions. We can't possibly cover all of them now, but
one of the things that we might think about is to have another seminar for a more advanced group of people. I can see a huge interest here of people asking very pertinent questions, and maybe we will try to see if you all are agreeable to another 1 hour session, but it's mainly a question and answer session. We see if we can organize something like that.
Okay.
Absolutely. I guess the other thing we could do, Professor Jain, because you can collate all the questions, send it through to us. We'll have it answered and sent back to you.
Right.
Okay, excellent. We'll do that. Yeah.
We'll do that. Excellent.
Great.
Okay, over to you, Chris, to close off.
So thank you, everybody. Thanks, Lee and Lasanka, the two Ls, for taking on all our questions. You'll have done a great job. You'll have made, I'm sure you'll have explained a lot of things to our people and I've learned a lot. And so as Prof. Janak, a lot of our thoughts have been clarified. So we can spend a little less time now arguing about Bitcoin. So thanks, guys. It's a very informative session, and thank you all from all the 25 countries of all of you joining in. We have gone over by 20 minutes. That's the longest webinar we've had, I think, over by 20. Thanks for having the patience, and we only lost about 10% of the people. That's excellent. So thank you very much, and see you all next time. Bye-bye.
Thank you very much.
Thanks,
And just to all the participants here, just remember that we have another webinar on the 21st, which I have developed a new philosophy of management, of philosophy of project management success policy philosophy. So do register for that webinar, and we'll see you all on the 21st.
I want to give a small plug myself.
Yes.
Just look at the article that I've written on tools and tips members.
Yes.
On everything that you wanted to know about Bitcoin but was afraid to ask, how to set up an account, how to get a wallet. Everything is hopefully explained completely. And whenever you think about an exchange, then you can think about someone like Independent Reserve or Coinbase and so on. So it's all in that article. Okay then.
Thank you.
Thank you very much.
Bye. Bye.
Thank you.
Say bye.
See you later. Bye.
Bye.